Welcome to Spiedel's California Minute. I'm your host, Catherine Zidane. This week, we're discussing some tips for filing California Form 3840 to report certain like-kind exchanges. For a deeper dive beyond simple filings, register for Spiedel's Critical California Tax Issues webinar on August 28th. We'll discuss the numerous issues that can arise with Form 3840, such as what happens in cases involving purchasing multiple replacement properties, divorcing couples, multiple owners, and more. For details and to register, go to caltax.com and click Webinars. Taxpayers who replace California real property with property located outside California in a Section 1031 exchange are required to file an annual information return on Form FTB 3840 California like-kind exchanges. The form is filed until the individual owner is deceased or the gain is fully recognized at the federal level. A taxpayer does not file Form 3840 to report property located in California that was acquired in a Section 1031 exchange. Form 3840 is filed in the year the like-kind exchange occurs and every year thereafter, for as long as the gain or loss is deferred. The filing requirement continues until the property has been disposed of in a fully taxable transaction, the property is transferred through inheritance, eliminating the deferred California source gain or loss, or the replacement property is donated to a nonprofit organization. The requirement to file Form 3840 ends if the non-California replacement property is exchanged in a subsequent transaction for California property. In this case, file a final Form 3840 and attach a statement explaining that the replacement property was exchanged for a California property. A taxpayer who converts an out-of-state replacement rental property to personal use still has to file the form, because a conversion to personal use is not considered a disposition in a fully taxable transaction. A taxpayer who receives a replacement property as a gift, rather than as an inheritance, also has to continue to file Form 3840 until the property is otherwise disposed of, for example, when a parent gifts a property to their child with the property's carryover basis. Our recommendation is that the giftee attach a statement to Form 3840 stating that the property was received as a gift and that the giftor file a final Form 3840 with a statement attached stating that the property was gifted to the giftee. If a taxpayer exchanges California real property for an interest in a Delaware statutory trust, or DST, the taxpayer can simply include the name of the DST in the description of the like-kind property received on Schedule A, Part 2, Line 9. The taxpayer has to report the deferred gain on Schedule A, Part 1, Line 8, and file the return annually until the gain is recognized for federal income tax purposes. There's no need to report each out-of-state property owned by the DST. If a taxpayer does not file a California return, the taxpayer will file Form 3840 separately as a California information return. The due date is the same due date that would apply if the property owner would have been required to file a California return. Form 3840 should be signed and mailed to the address included in the form instructions. If a taxpayer should have filed Form 3840 but didn't, the FTB strongly encourages submitting the form with an amended return. If it's filed separately, there will more likely be an inquiry from the FTB concerning the transaction. According to the Form 3840 instructions, if a taxpayer fails to file Form 3840, the FTB may issue a notice of proposed assessment on the amount of income deferred. This essentially accelerates the gain recognized on the deferred exchange into the year the form was not filed. But the law really only allows the FTB to accelerate this gain recognition if the taxpayer fails to file Form 3840 and fails to file a California return for that year. So California taxpayers who file a return but fail to file Form 3840 would not be subject to this accelerated gain recognition. To stay up to date with California tax law changes, subscribe to Spiedel's California Tax Letter. This monthly newsletter is written by California Tax Pros for California Tax Pros in plain English with helpful examples and charts. For subscription information, go to caltax.com and click Publications. That's all for this week. Join us next time for another episode of Spiedel's California Minute.